Hello, good morning my dear students. Once again we are coming together to study our account subject. So I am welcoming you. I hope you already revised what are the terms I explained last 2 days. Okay. Today we can start from page number 1.9. Page number 1.9. There the 18th item. Okay, please open your book and take this one, page number 1.9, and the 18th one, that is revenue. Okay, I am reading that those lines. Revenue in accounting means the income of a recurring or regular nature from any source. It consists of the amount received from sale of goods and from service provided to customers. It also includes receipt of rent, commission, dividends, interest, etc. Revenue is related with the day-to-day affairs of the business and should also be regular in nature. As such, the amount of capital introduced by the proprietor or borrowing loan is not a revenue. So here the meaning of revenue is, this is a inflow of cash. Business is getting some cash from some sources. Okay, it will be repeating nature. It is not happening only one time. It should be in repeating nature. Examples: we sold some goods, then we are getting the money. We given some services, then we are getting money. Our building we given to someone else, then we are getting the rent. Okay, and we are getting the commission. So from each transactions, from any transactions, if you are getting some cash, that will be in repeating nature, then this is known as a revenue. And here one thing is there, the lastly it is saying that the money received from the businessman, that is known as a capital. Capital is not a revenue. Okay. And one more thing, when we are taking a loan from the bank, it is not a revenue. We are taking a loan, then cash is coming. And when we are receiving the capital from the businessman, it is not a revenue. Revenue means from the sales we have to get the money. Then from the rent we have to get the money. Commission we have to receive. And when we are giving some services, then we will receive some money. This all. And dividend received. Okay. These all are the different type of revenues. Okay. From any transactions, any particular transactions, if we are getting any money, except we are taking a loan from bank or we are collecting the money from the businessman as a capital. Except this, what are the cash is coming? Where from the cash is coming? These all will be revenue. Now we can go to the next term. Next term is the income. Okay, income. You see the note? Income. Income is different from revenue. Amount received from sale of goods is called revenue, and the cost of goods is sold is called expense. We are going to see the meaning of income. Income is different from revenue. Okay, income is actually the difference between revenue and expenses. For example, if you are taking, we sold goods worth rupees 5 lakh, and this goods we purchased, and after that some expense was there. So total of that expense is 4 lakh. Selling price is 5 lakh. And for selling these goods, our cost was totally the purchase of goods and some other expense also, everything is added, and it is coming 4 lakh. Then the difference of 5 lakh and 4 lakh, that is known as income. Okay, clear? So here 5 lakh is known as revenue. 4 lakh is a different type of expenses added together, that is known as expenses. Then revenue minus expenses is known as income. So in the example, 5 lakh is the revenue, that much sales we made, that was 5 lakh. So this is the revenue. 4 lakh is the different expenses. This expense will be revenue expenditure. Okay. So 4 lakh it is, and 5 lakh minus 4 lakh, then we are getting the how much? 1 lakh. That 1 lakh is known as income. Now we can go to another term. It is the 14th one, number 14th one. Now just now we seen 19th one, so 14th one. Actually my purpose is we are studying from easy to difficult. Okay, firstly we are studying the easy one, then only we are going to the difficult one. And then without understanding the revenue and income, we cannot understand what is the profit. That is why firstly I taught revenue, then income. Now we can go to what is a profit. Okay, profit, it is given the top of that page, page number 1.9. You see, it is the expense of total revenues over total expenses of a business enterprise for an accounting period. Okay, did you understand? It is the excess of total revenues over total expenses of a business enterprise for an accounting period. It means we already seen revenue and income. So 1 year's total income is known as profit. Okay, this in simple meaning we can tell 1 year's total income is known as this profit. It means income means from each transactions. If you are taking one sale, okay, many sales will be there, everyday sales will be there. Okay, so first day's sales was 5 lakh and its expense was 4 lakh, then we got 1 lakh rupees income. Second day the sale was 3 lakh and its expense was 2 lakh 50, then we got 50,000 income. So in 1 year many sales will be there. Okay, that is why we are using the term total. In 1 year, what is the total income? That is known as profit. In another way, what is the income? That is the difference between total revenue and total expenses. So in 1 year, different revenues are there and different expenses are there. So we can tell in this way, the meaning of profit is, this is the difference between total revenue and total expenses of a particular year. That is known as a profit. Suppose 1 year's total revenue was 20 lakhs and total expense is 15 lakh, then 5 lakh is known as a profit. Clear? Now we can see what is the meaning of loss. Okay, loss is having two meaning. The one meaning is, it is just opposite of the profit. If our total revenue is less than total expenses, then it is known as a loss. That is the one meaning. Okay, you see the book, it is written there. The term conveys two different meanings. First, it conveys the result of a business for a period when total expenses exceed total revenues. The previous case was a profit was a total revenue was exceeding total expenses. Revenue was more than the expenses, then we are getting profit. Now loss is just opposite of this one. Here total expenses are more than total revenue, then it is coming loss. This is one of the meaning of that loss. And the second meaning is, second, it refers to some fact or activity against which firm receives no benefit. Okay, from some activity, if a firm is getting no benefit, otherwise a firm is losing something, then that is it is also coming in the term of loss. For example, loss by fire. A fire is happened in our godown or our place, and some goods is destroyed, then this is a loss. Okay, and another one, loss by theft. Somebody came to without our knowledge, somebody came and they took something, then there is a loss of something is there. So this is another meaning of loss. So two meaning is there. One is, if a total revenue is less than total expenses, then that difference is known as a loss, and this we are telling for a particular year. Okay, if 1 year's total revenues are less than that year's total expenses, then that difference is known as a loss. And the second one is, due to some activity, if we are not getting any benefits or if we are losing something, then that will be loss. This is the second meaning of loss. Okay, now we can go to the next term. Next term in next page, page number 1.10, it is given. drawing number 20. Okay. First of all, do you remember what is a capital? In the first day I told you what is the meaning of capital. Capital is the money contributed by the businessman to start a business, that is known as a capital. Okay. So this drawing is just opposite of capital. Capital means businessman is bringing some money into the business, that is known as a capital. But a drawing is just opposite. Businessman is taking some money from the business for his private use, that is known as a drawings. Okay, so opposite of capital is known as a drawing. I am reading from the textbook. Listen. Any cash or value of goods withdrawn by the owner for personal use or any private payment made out of business funds are called drawings. From the business resources, from the business he is taking some cash, otherwise he is taking some goods. Okay, the goods which he kept for the selling purpose, that goods he is taking for his personal use, then that will be known as drawings. Okay, then next term, that is entry. Entry means many transactions will happen every day. Okay, so those entries we have to write in a systematic way in the books of accounts, then it is known as a entry. Okay, entry means we have to write the transactions which is happens, that we have to write in a book. That way of writing, okay, some method is there that you have to study. In the coming classes we will study how to record the transactions. Okay, for example of transaction is purchased goods for rupees 80,000. Then we are not using this sentence to write. Some technique is there, some method is there. According to that systematic way only we are recording this one. That recording of transactions in the books of account, that is known as a entry. Okay. Then next term is bad debts. Bad debts. See the book, the 22 one, bad debts. It is the amount that has become irrecoverable from a debtor. It is a business loss and is debited to profit and loss account as an expense. The meaning of bad debt is, already I told you what is the meaning of debtors. Do you remember what is the meaning of debtors? Debtor is there, creditor is there. This already we studied. The meaning of debtor is when the goods are sold on credit. When the goods are sold without receiving the money, then that a person is agreed that money he will give it to us in the future. Okay, to whom we sold the goods on credit, that a person is known as a debtors. Then the meaning of a bad debt is, if those debtors they are not able to give the money to us, then that much amount is known as a bad debt. It means debtors became bad. Okay, some debtor means many persons are there. We sold the goods to many persons on credit. The meaning of credit is without cash. They agreed that cash they will give in future. Okay, then here some persons they are not able to give, they are not in a position to give the money back. Then that amount is known as a debtors. This is that amount is known as a bad debt. This bad debt is a loss for the company, or this is a expense for the company, and it is written there. It will be debited to profit loss account. It means last day I told, end of the accounting year we are preparing trading and profit loss account and balance sheet we are making. Okay, end of the accounting year, that is the 31st March. Every year we will make trading and profit loss accounts. Our purpose is we want to know how much profit we made or how much loss we suffered. To find out that we are preparing trading and profit and loss account we are making, then this item bad debts we will take there. That is the meaning of that. Okay, end of the accounting year we are making, in addition to trading and profit loss account we are making balance sheet also we are making. In the balance sheet we are taking different type of assets and liabilities and capital also coming there. Then next time It is insolvent. Okay, and after that we will study what is solvent. So insolvent and solvent is there. The meaning of insolvent is if a person is not a position or he cannot pay his liabilities from his assets, then that situation is known as insolvent. He is not able to pay off his liabilities, then that person is known as insolvent. Bankrupt. Okay, we can tell bankrupt or insolvent, both are same. Its opposite is solvent. Solvent means that a person can paid off or he can settle his debt, his how much money he is liable to others, or he is able to give his liabilities from his assets, then that person will be solvent. If he is not able to pay off his liabilities, then that person is known as insolvent. Then another term is stores. Okay, stores is this is a part of current assets. We studied a fixed asset and current asset is there. Stores is a part of current assets, and you see the term stores is used to denote materials held by an enterprise for the purpose of consumption in the business and not for resale. It means it is some items this we will use in the business not for the resale purpose, but this we want to use in the business. Okay, in the business we want to use these things, and its value will be always small only. Okay, if the value is a bigger one, and if this year using more than 1 year, then it will be fixed asset. But this is a part of current assets, this stores. And the examples we can see, examples are lubricants, spare parts, packing materials. These all are the examples of stores. So stores are we kept in the business not for selling purpose. We want to use this item in the business, then that is known as stores. Next term we can see entity. Okay, entity means this is existence is there. Okay, it is from the earlier I told business and the businessman, they are separate. Business is having a separate entity. Okay, see the book, it is written there, entity. An entity or business entity means an economic unit which is formed for earning income by providing service or selling goods. The selling goods I think easily you can understand. What is the meaning of giving services? Services means automobile workshop is there. Okay, in the workshop what is happening? Their sale is there and the service also is there. Service means repairing, and by doing the repairing they are getting the money. Okay, so this meaning of entity is it is a separate unit, and that means it is a business unit. Okay, it is a business unit, and they are selling the goods, otherwise they are giving some services and they can earn some profit. Okay, that is known as entity. Then we can see what is turnover. Turnover is the alternative name for sales, and turnover is 1 year's sales together is known as turnover. Okay, 1 year's sales, how much it is coming totally, every day sales will be there, every month, then we are adding all the sales together, and for 1 year how much is coming, it's sales, that total sum, that total amount is known as turnover. Then next term is livestock. We studied about stock. What is stock? Stock is unsold goods, the goods which are ready for sale. We are purchasing the goods, we are selling the goods. So on a specified date, how much value goods is lying with us, that is known as stock. Okay, stock means goods which are ready for sale. Their opening stock is there, closing stock is there. What is opening stock? The beginning of the accounting year, how much stock is with us, that is known as opening stock. What is the closing stock? End of the accounting year, how much goods are lying with us, how much goods is there with us, that is known as closing stock. And I told one more time, last year's closing stock will be the opening stock of this year beginning. Suppose last year means 2020 31st March, we closed the books, we prepared a trading and a profit loss account and a balance sheet, we find out the profit, and we are seeing how much value of asset is there, liability is there, that is through balance sheet. Then in the balance sheet, this stock will be there, okay, because the stock is one of the asset. Balance sheet is the list of all the asset and liabilities. So in the balance sheet, that stock is there. That stock is known as a closing stock. And next year, when you are starting, next year, this closing stock will be our opening stock. Next year means if 31st March 2020, if we closed our business, means the books we closed, then next day we are starting a new year. Next day means 1st April. 1st April 2020. What is the stock in the last day? That will be the opening stock of this day. Now, our term is livestock. Livestock is entirely different from this stock of goods. Here, this is the living stock. The stock is having life. That is known as livestock. The animals which is kept in the business. Okay, for helping the businessman, some animals we kept for bringing the materials or shifting something. We are keeping some animals like a horse, donkey or elephant. These things that is kept in the business, that is known as livestock. Listen, domestic animals such as cattle, horse are known as livestock. This is kept in the business. Okay, in the business we need the help of those animals. Then that animals are known as livestock. Then we can see what is the meaning of investment. 29th one, investment. Investment refers to the development funds that we put in shares or debentures of other companies with the intention to earn some money. Okay, that is known as investment. Or we can invest our money in bank also. Fixed deposit we can do. That is also example of investment. So the investment is we are putting our money outside. We are keeping our money outside, either in bank deposit, fixed deposit. Otherwise, we can purchase the share or debentures of other companies. Then we will get some income. Okay, if we are putting our money in shares, then we will get some dividend we will get. That company's dividend means that company's part of profit. Okay, some part of the profit we are getting if we are purchasing the shares. So for getting some dividend, we can invest our money in shares, or we can purchase some debentures of other companies. We are giving some that company is borrowing money from us. Okay, that is we can purchase some debenture, then we are giving some money to that company, and we will get some interest regularly. One fixed percentage of interest we will receive regularly if we are putting our money in debentures of other company. That is also investment. So we will get a regular interest. And if we are purchasing shares, or we are purchasing the debentures, or if we are putting our money in fixed deposits, in all the cases we will receive some money. Okay, that is why it is telling that investment refers to development funds and with the intention of earning some return. Here return will be, in case of shares, the return will be dividend. In case of debentures and fixed deposit, the return will be interest. Okay, then next term is GST, goods and service tax. Goods and service tax, that is known as GST. Earlier days there were different type of tax like VAT, service tax, excise duty, sale tax, like that many number of tax was there. Now those tax, everything is removed, and in that place now only one tax came into existence, that is known as GST. Okay, GST's full form is goods and service tax. And GST, when we are purchasing something, then we are giving the GST, and when we are selling the goods, the company will receive or the firm will receive the GST. Actually, the GST which you are receiving, this you have to give it to the government, because it is a tax. Tax is the income of the government. Tax we are collecting on behalf of government only. That is why if we received the tax when we are selling the goods, then this we have to submit to the government. GST is not our income. Okay, GST which we collected, it is not our income. That is why how much GST we are collecting, then and how much we paid some GST also. Okay, when we are purchasing the goods, we are paid some GST. So it's a difference how much GST we collected and how much GST we paid. That difference, if a collected amount is more, then the balance amount we have to submit to the government. That is a GST and all. Then we can see one more time. Now we are seeing the first one in page number 1.2, business transactions. Take the first page and see what is a business transaction. Business transaction is an economic activity that changes the financial position. Okay, it is an activity that changes the financial position of the business. Whenever any business transaction happens, then it will lead to the changes of any assets or any liability or any capital. So every business transactions will make some changes in the business. That may be some assets value can increase, at the same time some assets value can decrease, or some assets value can increase, at the same time some liability can increase, or some asset can increase, at the same time capital can increase. So that transactions are known as business transactions. Okay, that should affect the financial position of the business. Then only it is taking as a business transactions. For example, we purchased the goods without giving money. Okay, near about 50,000 value goods we purchased without giving the money. Then we can think how it is affecting. Goods means this is a part of the stock. So stock is an example of current assets. So this transaction is increasing the value of our asset. At the same time, it will increase the value of liabilities also, because of money we did not pay. We purchased on credit without giving money. We purchased. So without giving money, when we are purchasing, that person is known as a creditors. So this transaction affected two places. One is our stock is increasing. On the other hand, the liability is increasing. The name of that liability is creditors. So this is a example of business transaction. And I am telling another example. We appointed a person. We appointed a person as our staff member. Okay, this is not an economic activity, because simply we are appointing a person. Then it should not affect our any of these three items. Our asset, liability, capital, it is not affecting. So simply appointing a person in our office, it is not a business transaction. This will not write in the books of accounts. But if we are giving salary to that person, then it is a business transaction. So simply the appointment we are making, now we are not giving any cash and all. Okay, that is why the appointment of a staff, that is not a business transaction. This we will not record in the books of account. In accounting subject, this will not record. But if you are giving the salary to that person, then this you have to record. That will be example of a business transactions. Then the chief features of transactions are given. That you just read what I told, that only given there. Okay, then one more thing, event. Okay, the meaning of a event. An event is the consequence or a result of a transaction. For example, Sachin start a business with a capital of 5 lakh. he purchases the goods for rupees 4 lakh for cash and sells 3/4 of these goods 3 lakh 80,000. He pays rupees 20,000 as a rent of the godown. The following results can be drawn from the above. Many transactions are given. Then the events are profit this much they got, the closing stock this much is there, how much cash balance is there, lastly the capital amount is changed, so that much is happened. So here the meaning of event is what is the result of a transaction. Okay, what is the result of a transaction, sir? Here some transactions are given, not only one transaction, many transactions are given. He started a business and he purchased some goods, some expense also he made. After that he sold some of the goods. Then what happened? So that result is known as the event. The effect of some transactions are known as event. Okay. Here the after that here 4 transactions are given. Investment of rupees 5 lakh in the business, that is the capital. Firstly he invested that much money and he purchased 4 lakh value goods and he sold 3 lakh 80,000 value goods. He sold payment of godown round is 20,000. These are the transactions are happened. Then after that he find out the profit, then how much value goods is there in the business after the sale, then how much cash is there after these all the transactions, then what is the capital after all these transactions. So the result of a group of transactions, that is known as a event. Okay, once again see what is the event. Event is the consequence or a result of a transaction. Okay, many transactions are happened. After that some event will happen, something will happen, it will change the value of assets and liabilities and it will affect our profit or it will affect our capital. Okay, that is known as a event. So we can make a quick review of what we studied today. Okay, firstly we studied what is the revenue. Revenue means the recurring nature of inflow of cash. Okay, that is known as the revenue. And these 2 items are not included in revenue. That is we received money from the businessman in the way of capital, and second one is we are borrowing money from the bank. Okay, it is a loan, so we are receiving loan and we are receiving capital. This is not a revenue, but by the sale of goods and when we are giving some services, how much money are getting, rent, commission, dividend, these all are the examples of revenue. Revenues are repeating nature. Next one we studied what is the income. Actually total for a particular transaction, what was the revenue minus for getting that revenue how much expense was there, that we are subtracting, then we will get a income. Okay, so revenue minus for getting that revenue how much money we spend in the form of different expenses, that difference is known as income. Then we studied what is a profit. Profit, that term we are using for a not only for a 2-3 days, for 1 year. Okay, collectively we are telling in 1 year's result. So total revenue minus total expenses, that is known as a profit. Then we studied what is the loss. Loss is having 2 meaning. One is the opposite of profit. Okay, opposite of profit means total expenses are exceeding total revenue, then it is known as a loss. And another meaning is due to some transactions, if we are not getting any benefit or we are losing something, then it is known as a loss. That is the second meaning of loss. Then after that we studied what is the drawings. Drawings, I told it is just opposite of the capital. Businessman is taking some money from the business for his personal needs, that is known as drawings. Then entry. Entry means the business transactions we are recording in the books of accounts, that in a systematic way, that is known as entry. Then bad debts. Bad debts means some of the debtors if they are not able to give that money which they owes to us, that money is known as a bad debtor. Debtors became bad. The irrecoverable money from the debtor is known as a bad debt. Next, insolvent. If a person is not able to give his liabilities, a person is not able to pay his debt, then he is known as a insolvent. Then we studied what is a solvent. Solvent is just opposite of that one. That person is able to pay off his liabilities, he is able to pay off his debt, then that is known as a solvent. Then we seen what is a stores. Stores are, it is a part of current assets, and this is not kept for the resale purpose. This they want to use in the business, that is known as stores. Then entity. Entity means it is a unit of business organizations that it is as a separate existence. They can make a profit by selling goods or rendering services, then that is known as a entity. Then turnover. 1 year's total sales is known as a turnover. Then livestock, living stock. Okay, the stock which is having life. It is examples are domestic animals which they are kept in the business, and in the business we need their help. So those animals are known as livestock. Then we studied investment, the money which we invested for our future benefits, and it will give some income to us, that is known as investment. Then lastly we see GST, goods and service tax. Earlier days many type of taxes are there, like excise duty, then sales tax, then value added tax, many taxes tax was there. So now all those different tax is eliminated, and we implemented only one tax, that is GST. Okay, then we studied what is business transactions. After that we are seeing event. Okay, so this much. So our first chapter is completed. This much you revise and read 2-3 times and make your concept very clear. Thank you.